Hello and a warm welcome to my channel. Ask me a stock and I will cover it for you from a medium to short to long term perspective based on the studies of Ichimoku, which is a Japanese based multi time frame study, and Harmonic Trading Patterns, which is derived out of Fibonacci. So, if you would like me to cover a stock for you, write it in the comment section. But do note it should be from either the large, mid, or small cap segment. No micro cap stocks, please. Now, a disclaimer, this is not a trading or investing advice to you. This is purely an educational talk based on the studies of Ichimoku and harmonic trading patterns. Please do your study properly before taking any decision with regards to your trading or investing in the stock. Also, please note no money has been charged for this. This is completely free. Now, today's talk is Reliance Industries, the the flagship company of Mukesh Ambani, and also the first company in India to cross a total equity of 10 lakh crores in the financial year 2025. The fourth quarter results of Reliance gave a mixed performance. The strength, of course, came from the Jio platform and the retail segment, but there was weakness from the core business of the company, which is oil and gas. Consolidated revenue grew by 9.9% year on year, while consolidated profit after tax increased 6% year on year basis. However, there was an EBITDA margin contraction by 0.9%, mainly due to the weakness in oil and gas segment. Also, employee benefit expenses increased by 12.7% year on year, and finance cost also increased by 6.8% year on year due to higher average liability balances in the company. Now, let's go and have a look at the charts and try to decode what lies ahead. Now, as usual, I'll start from the highest time frame. In Reliance's case, I will start with the quarterly charts, fantastic NSE debut, and from there, given a fantastic return to investors. Yes, in compared to several other stocks uh, from the peer, from the 19s and the 2000s, yes, it has not given that phenomenal a return. But one must also keep in mind that due to its market cap and due to also the demergers, first in 2006, after the death of Dhirubhai Ambani, the discovery of price of the split between the two brothers, and then again later on in this decade, the Geo Finance split which took place, and that has also been moved from here. Company at 2006 decided to stick to its core business and regarded quite well. Of course, one can also see that this kind of underperformance of the stock, which we saw from 20 to 21 to 23, prior to that, again, during the 2018 to 2020, which was practically the whole market. And then here, a big one, 2008 to 2015. That's a massive 7 years of no performance. Prior to that, again, 2001 to 2003 out here. So it's nothing new about the stock of going into a sideways shell. That's the good part. Instead of deeper corrections, which we see from several stocks, this one doesn't give you a deep correction. It goes into a time-wise correction, and hence, from a short-term, medium-term investors' point of view, it is not that great. But from long term, it always serves up well, as you can see. The quarterly support is coming in at 1325 and then straight down at 1000 out here. The baseline will continue to be flat for another couple of quarters. So, one more reason for the stock may not give you super duper moves so easily, so sharply coming in the coming week, months. Let's have a look at the monthly chart out here. Now, in the monthly chart, again, yes, this is the exceptional pandemic decline. You could see it. The decline actually had started building much earlier from December, then the quick crash, but then fantastic recovery. And after that, it has, done quite again sideways, pulled up sideways, pull up Hopefully, this sideways is done and pull up now. There is a monthly support coming in at 1325. It's a crucial one, 1325. If it does not hold here, 1325 to 12, maximum 1275, it has a probability of then hitting 1150 on the downside uh, in the coming months. If that were to happen, keep that factor in mind. 1300 to 30, 1275 to 1325, very crucial in this case. The monthly resistance is at 1560. You can see the June and July candles could not push above that. The body of the candle has not been able to do much out there. Let's have a look at the weekly time frame and try to analyze what lies here. So weekly, we can see uh, quite a sharp up move from March, and then an equally sharp down move from there onwards. So retracing quite heavily in this case. The future Kumo is still bearish in the weekly Ichimoku, which is suggesting the reason for no flying off moves on Reliance as of now, more of consolidation or slowly going up till the time the future Kuma turns bullish. The weekly support is at 1410, 1350, and then all the way down at 1200 and almost 1290, so 1300. These are the crucial ones which also match with our monthly support zone. The resistance all the way at 1550. That's a big resistance at 1550 for now. Let's have a look at the daily time frame and the hourly and the derivative data also. Now, before I go on to analyze the stock, I would like to inform you that my courses on harmonic trading patterns, Ichimoku, and trading psychology are available. These are made in videos along with PDF, level wise, chapter wise, broken into small segments with loads of examples of both bullish and bearish scenarios. Both Ichimoku and harmonic trading patterns are available in English and Hindi, so you can select whichever one you prefer. Also note for beginners who have new to technicals or chart studies, there is a bonus material of introduction to technicals and a 3-hour depth material of candlesticks, bullish, bearish with loads of example there. Trading psychology and risk management is an extremely important matter, but most traders either tend to ignore it or are not aware of it. And that's the prime reason why we hear about from SEBI 90% traders are not making money in the market, because trading is more about discipline and risk management than about analysis. The trading psychology risk management course is extremely detailed and it has bonus material. Number one, other technical studies are also explained which complement harmonics and Ichimoku. Number two, there is a study of relative rotation of sector, which means at any given time which sectors are looking strong, which are looking weak, and also within that which stocks are standing out. Number three, based on the market trend at that moment and your own risk appetite, whether you want to go in with an aggressive stand or a defensive stand, which option strategies will work with you. And finally, a self based kit, a toolkit, which shows you a SWOT performance, that is, your strengths where you should continue to flourish on, your weaknesses where you need to work, opportunities where you can improvise, and threats, that is areas in the market where you should not delve into that kind of trading or that particular sector or scenario. The description or the details of the courses are there in the description box, the link. You can check them out for details, and if you have any doubts you can shoot out a email to me and I will get back to you on the same. Now let's get back to analyzing the stock. Now, in the daily time frame, like our entire market, which we had in the month of, January to March, where there was tremendous selling pressure, and we have this trend line breakout happening in end April. This is the April 7th low, turnaround from there, breakout. The breakout has not done any pullback, just took off, and with three gaps. This is the first gap, this is the second gap, and now the third gap is also out here. So sustaining, trying to push a hold on to these gaps, which is the bullish sign for the stock, that it has not been. So these gaps now are crucial supports for the stock in case we see some kind of selling pressure in Reliance in the coming days. In the daily time frame, Reliance support is at 1395, then 1360. First is that gap area, then all the way down to 1360. If that does not hold in this cloud out here, 1320, or into the breakout zone here at 1290, 1300. So crucial levels, most importantly, this gap area out here near 1390, 1400. The resistance in the daily time frame currently at 1430, but that's too close. I would keep the bigger resistance right now at 1450, above 1440 to be more precise, is the resistance I'm going to be looking at for the stock in case I want to have a bearish stand or I want to look bullish, want to go bullish in the stock. Let's have a look at the hourly time frame. Now, hourly time frame, as you can see out here, has a possible head and shoulder structure, not yet broken down, but we cannot rule out this structure, and that is why today's derivative data for the stock shows a 1% decline in price with a 22% increase in open interest. That's fresh shorts build up. But the 5-day data shows the price flat with a 30% increase in OI. Of that 30%, 22 happened today. So previous 4 days, very little OI buildup. But 8% for Reliance is not very little. It is still decent. So hence, this structure of the head and shoulder should not be, ruled out. It's not a classical head and shoulder one. So hence my level is this, if 1440 is not taken out, that OI buildup which we have seen could witness more selling in the stock. And in that case, the downside levels would be at 1400, then all the way down to 1375, 1350. Let it cross 1440, and then we might see a decent amount of short covering in the stock. So in conclusion, my view for the stock is that one should, from a bearish angle, even if I look at it from a bearish angle, wait for some red candle in the short term and look for downside levels of 1375, 1375, 1350 to 1300. Those are the levels I'll be looking at. If it fails to hold this 1275, 1300, like I said, then the stock is bad, continues to decline down. While upside, I would be looking at above 1440, first for 1500, and then all the way, on the upside, which are these Ichimoku targets I have after 1550 of 1900, 2250, 2600 odd, but those are for long term. Also, from a investor point of view, if I were to accumulate the stock, I would look at the accumulation in this wide range of 1425 and the down above 1450, 1500 and downside till 1300. Accumulate in that zone. Keep 1275 as a what do you call caution level, and look at the long term picture accordingly in that case. Like I said, it might take its sweet time to cross above 1550, but once it does that, it can be a massive outperformer. I hope this video is of help to you. So please do like it, share it, and do follow me for regular stock and index ideas. Until then, all the best with your trading and happy investing.